Let's start where Scarlett just ended with Bloomin' Brands. We got this 13D filing. The JANA Partners, which I believe had taken a big stake in the company and exited prior, is now back in play again, right?
JANA Partners loves these consumer companies. They're also agitating at Callaway Golf and a couple others. So we'll see. They're a big activist investor, but not as big as they used to be. So we'll see what kind of influence they have here on the board.
Okay, so that's the most recent one. I want to go back to earlier in the week, and I was not here in the office for this one. Philip Morris and Altria split some 11 years ago, but now they're getting back together again. So the more things change, the more they stay the same. But yet this time it's getting a mixed reception from investors. Why is that?
So Philip Morris and Altria had actually been one company just 11 years ago, and they split up for different reasons. And Philip Morris investors originally wanted to diversify away from the U.S. At that time, you may remember that tobacco litigation had hit the U.S. very hard and was very controversial, whereas Philip Morris International had a lot of growth in companies like China and India. But now, almost a decade later, the future of tobacco is a bit uncertain. There's all these new products like Juul and IQOS, and it makes sense for these companies maybe to be together, but these Philip Morris International investors have to accept that the U.S., which has more regulatory challenges, isn't what they signed up for.
All right, let's turn to something a little more healthier here. And Peloton, they're supposed to be starting their roadshow at some point soon. What are we looking for here?
Peloton, we were a bit surprised at how they announced earlier this week they're looking to raise up to $500 million. Sources have said they could aim for an $8 billion valuation. That's a huge price for a company that is not profitable and makes very expensive products that not necessarily you'd want to upgrade. Let's say you spent over $2,000 on a bike. Would you want to get a new one so soon? So that'll be a big question for investors on the appetite for this company, on whether it's a fitness company, a media company, and what kind of margins it could have.
Speaking of companies going public that aren't making money, let's talk about WeWork. Going into the fall, this is the biggest IPO that people are awaiting, that's expected. What do we know about when the roadshow starts, and any idea on valuations and what this means for SoftBank, which is a huge backer?
Based on when the company filed their prospectus for their IPO earlier in August, we are expecting a roadshow to start in September, where WeWork executives will hit the road and try to gauge what is the interest in this company that definitely loses a lot of money and has many challenges to its business. The valuation is not clear. We know that SoftBank had previously invested at $47 billion. You'd have to assume for SoftBank to make money, the company would have to go public at a bigger valuation. But can investors stomach a $50, $60 billion valuation for this company? There's a lot of questions, and we'll have to see in the coming weeks how investors respond. It'll also be key for SoftBank, as you mentioned, ahead of them trying to close a second vision fund. This will be a really key test for them. Uber's IPO did okay earlier this year, but they really need another win because they made such a big bet on this.